What's up everybody, Tom here with another video. In today's video we'll be discussing the latest news to do with the stock markets right now. We'll also be taking a look at our technical analysis levels for the S&P 500, Nasdaq, Bitcoin, dollar index, Tesla and more to try to get a bit of understanding about what exactly is going on. Tech stocks continue to decline while the rest of the market actually stays quite firm. So what is going on? Let's check it out right now. Stay tuned. Alright guys, well as you can see very clearly here, it was really just a tech sell-off yesterday. We had Tesla down 5.84%, continuing its decline into what could be a movement back to the 500-450 level. We'll talk about that more throughout this video. Google down 4.27, Apple down 4.17, and Nvidia in a very big surprise, 6.97, now breaking below its original supports at that $500 and doing so in a lot of pressure. So this, guys, is a story of a market within a market. And of course, that is the attack on technology stocks right now. XLK negative 2.42%. The technology sector really brought down the rest of the market. In fact, the rest of the market was basically green and it was just the tech sector that was down. You move over to the actual indices. Nasdaq led the charge, 2.89% down, back to the heavy support that it had on Friday, and SPX down 0.52 because of that tech sector decline. Russell and Dow Jones actually up on the day. So this is not usual in the market. It's a question of whether these tech stocks are really truly worth the valuations that are being shown. And I think this might continue for a little bit if we close underneath these levels, and I'll explain that soon. Remember the rejection last week? Did we get a follow through? We didn't, and I'll talk about that later in the video. It's very important to wait for that final piece of the puzzle when you're taking a look at technical analysis. Here we've got the March per quarter, just in terms of S&P 500 returns. The Nasdaq's usually a little bit weaker in March, which is showing right now. But 0.5%, not a great month in March. April is the month that I'm looking at this year to be a standout month. And remember, these stats are from 1928 to 2020. They hold true really well. If you scroll down and have a look at just even the last decade, you can see here still April is a very good month and May is historically actually not bad, with July being the next good one into August, into that next second earnings season. Let's have a look now at the volatility index in the technical analysis. So volatility is rising. It's still 25.5, but it's not going crazy. So volatility has increased, but the volatility that we're talking about is really in the Nasdaq. If you actually had a look at the VIX of the Nasdaq versus the VIX of the S&P 500, it is much higher and much more aggressive. And that's because, again, it's tech that's really getting hit, not the broader market right now. If we look at US dollar continues its increase from last week. We had that closure above the 20 exponential moving average on the weekly. We had our movement above all of these wicks here on the way down. So we had all of our declining lower peaks. It's now closed above those zones. So I think the dollar index is really trying to reprice itself potentially not only to the 93, but the 94 zone. I would expect some resistance to be found here. And just remember, when you're doing your analysis to figure out what's going on with these types of declines and how to spot these, wait for the closure above the previous trend line down and above something like a 20 exponential moving average if it's been respected on the way down. That's one of the best ways that you can get, and we showed this on the stream last night with the US dollar yen, the best ways that you can figure out that something's ended the downtrend and beginning an uptrend, especially when it's so very clear like it is here. Dollar index looks to be strong for now, and if that and treasury yields continue to spike, we're sitting at 1.6% here for the 10-year treasury yields. These could go back up to 2. Remember, where's our resistance for the treasury yields? Around 2%. That's what we reached back in December, November of 2019. So treasury yields are known to spike fairly hard. When they spike very hard like this and they hit this 2 level, they will probably start to decline a little bit, but it isn't there yet. It's gone through the previous monthly support at around 1.45. Now we're closing in on going towards the 2. And I said this a few times, it reprices quickly, then it consolidates. So don't be too concerned about the long-term ramifications just yet, because the bond indices, and especially the treasury yields here, they tend to reprice quickly, then consolidate, then have their next move later on. So 2 may be all it is. And at this stage, 1.6, if it does go to 2, that's a worrying sign for the Nasdaq in terms of what the pullback could look like. And we'll take a look at that very, very soon. Bitcoin continues its run up. This was some great technical analysis. We did this on TradingView. We've also done it on our weekend video. Bullish daily hammers, absolutely beautiful. That's the type of thing we want to see. It's the follow through movement above that's the key here for the technical analysis. We saw movement into the 52,000. It came back off after the smaller time frame showed some rejection, and now we're putting pressure back on the 52. Again, we close above 52. Where do we go? 55. Previous resistance over here on the smaller time frames, and then maybe even to the 60,000. So Bitcoin's doing it even though dollar index, guys, is actually going up. It's pretty amazing to see Bitcoin being such a boss here when it comes to trading. Same with Ethereum. Ethereum trading now at 1810, starting to close the gap. March historically has been a pretty bad month for Bitcoin, but at the same time, it's been a decent month for Ethereum, and Ethereum's certainly closing the gap with Bitcoin right now. Let's take a look at gold. Gold hit our support. Remember, we don't try to catch falling knives on this market, so we can't tell that this is the lowest point it will get to, but it is certainly a point where it goes through the previous trend line lows. We have the previous support area around this 1675 area, resistance, and it's just reached that. So I think that this is a very interesting level to look for on gold. I'd be now looking for structure to form, and if structure does form and break out above, that's positive. If it continues its slump down, well, we could be looking at even lower points for gold. Unfortunately, people won't like it, but there might be some 1600 flats here, or even 1550 previous resistances over here. So there's some problems here for gold right now. It doesn't look bullish at all. It's just hit the first level, filling what we call the participation phase of the market. And this is the part that I like to be part of when I'm shorting or longing in the market, the participation phase. Break below the last previous support and continue that very quick repricing action, similar to the dollar index right now, with a series of 2 steps forward, 1 step back movements, all the way down to the support. Congratulations for people that were in gold to the short side. That was quite a nice trade. At the same time, silver has been stronger, which we kind of thought it would be. It's trading around $25 right now. A closure underneath $25 on the daily time frame will expose things like 24, previous supports across the board here. That's the type of thing I'm looking for on silver. We haven't had it yet, so at this stage, 25 remains support there. So where to next for Tesla? Well, we've mentioned a few times that the 20 exponential moving average has been a point where resistance has been found across the board on this declining Tesla pull. If we now get a new low, so let's say we break through this point here, which is around $539, we almost assuredly will go towards the 500 and possibly into the 450 range. Now, there is great structure on the left-hand side for Tesla. You'll notice here, $500 previous resistance, and it sold off. We have the $450 area as well, being a 1, 2, 3, 4, possibly even 5 point resistance. So if the market gets back into here, all of this range should create structure, which creates the buying opportunity for us. So 500 certainly a point of interest here in the markets. So what's going on with the actual stock market, the S&P 500? Well, it's a tale of two stories here. The actual stock market, 3842, looking okay. It's looking okay. Basically, a big pull up. We saw the rotation continue into those value stocks. I still think that they've only got about a month to go. That is financials especially, because they're starting to get a little bit heated. But 3842, resistances coming through here, even in this little range. What is this? This is basically sitting around the 3866. We haven't been able to hold above there. The next fight zones, though, are all about the weekly long leg doji indecision candle. So look to this one. Basically put your resistance here, your support here, and everything in between this is just a day trading opportunity. It isn't giving us clear direction on the market. What's a long leg doji telling us? A long leg doji is telling us the market has no idea of a clear direction at this point. It is indecision central. So a break close below this 20 exponential moving average would push in for the 3600 and then maybe even lower. but the break close above is going to push for the 4,000 on the S&P 500 and probably more of a recovery through all of the market indices. 38.42, I'm not really too scared about what's going on in the broad market right now. It's just the tech stocks. And when you look at something like QQQ, you'll see what I mean. QQQ, Invesco Trust, is down to around that 300 zone. Post-market is trading at 301. So there was a little bounce. This is the area that found support buys. It makes sense. Resistance, resistance, resistance becomes support, and a 23.6 fib of the entire move upwards. So it makes sense for this to be the first buy zone. If the market got through this low, let's say the market closes below the 300, where does it go? It's going to transform itself back to the 38.2 fib, which is pushing for around a 273 level. So the Nasdaq is a totally different to the stock market right now as in the S&P. We have had bounces off this zone before. Bounce, strong bounce, no follow through that's good enough. Remember, when you get follow through, what do you want? You take the percentage of this candle, the movement here, you add around 10% onto it, and that's the level that you need follow through. Look at this. Look at these sneaky Wall Street guys. Look what they're doing. It barely gets above. So it gets above 0.30966 to 310 kind of area. Just not enough follow through there. Let's have a look at the smaller time frames. See how it did it. No real closes. Started to struggle around that zone. See that 309 previous high. Struggled through it. Bounced very quickly to get that little bit of a high. Instantly closed below. Even if you come into the smaller time frames and look for the confirmation of the new high above that point. Remember, you've got your resistance here. Let's at least see a 15-minute close above. I'd like to see an hour, but at least 15-minute. That gives you the ticks. You're not even above the 312 at that point, and then you can say, okay, now we're going bullish, and the bullish hammer has played out. This candlestick pattern is not as good as everyone thinks. It's a hammer, yes. Is it strong? Only when it gets the momentum going behind it. So for the QQQ and for the Nasdaq right now, all that's important is it holds above these lows. If it closes through, it really does expose some heavy flash selling down to 270. And if you look at a lot of the tech stocks, things like AMD, etc., they're all sitting right around such heavy support that if they break through these zones, it makes sense for a bit of a flash crash to come through QQQ. So it must hold right now, right here at this place. So I thought it'd be worthwhile mentioning GameStop. 194.50, post-market about 191. Massive close here in the markets for GameStop. Now that we've reached around this 200 and broken through the previous 160 zone, that's a very strong sentiment. We held for the day, even better. It barely went down after the market close. So tomorrow could be quite explosive in the pre-market. Make sure you join us there. FX Evolution on YouTube will be going live about 3 hours before the market does open. I think GME and AMC are going to be particularly very interesting stocks to look at, and the rest of the market to see what the decision is today. At the time of closing of this video, we're 38.41 on the US 500 and 12,383 on the Nasdaq. Good luck, everybody. Bye for now.